Hi, I am Anna. I come from www.ntvforex.com. USD positive bias as GBP suffers on Brexit trade negotiations. No deal risk analysis. http ntvforex.com News ID AF011B97 2020 12:30 p.m. Market overview. The near-term dollar rally has been boosted again in the wake of Friday's non-farm payrolls report, which roundly encouraged and drove a decisive reaction on bond markets. A yield curve, a bear steepener where longer-dated yields rise faster than shorter-dated yields, tends to be dollar supportive, and this reaction set the dollar back on its recovery path once more. The volatility on Wall Street with a sharp tech sector profit-taking muddies the water of the dollar. However, with Wall Street shut for Labor Day public holiday today, the trend of the near-term dollar rebound is still intact. However, with bond markets also shut, there is a sense that this will be a muted session today. Despite this, the hard-nosed stance of both sides in the EU-UK post-Brexit trade negotiations is weighing on sterling this morning. The soft deadline of mid-October for any agreement means that both sides seem to be ramping up the rhetoric, and sterling is caught in the crossfire. It could get messy for GBP in the coming weeks. Wall Street closed lower on Friday but well off session lows as NBSP. The S&P 500 closed a 28 ticks at 3,426, with no futures today due to the Labor Day holiday. Asian markets were lower overnight, Nikkei 0.5%, with European markets mildly higher in early moves. In Forex there is a mild USD positive move, driven mostly with GBP weakness. In commodities gold is a shade lower. It is a U.S. public holiday for Labor Day today, so the economic calendar is pretty light. The Eurozone Centix investor confidence at 0930 BST is the only real data to be aware of, with consensus expecting a mild improvement to 10.8 in September from 13.4 in August. Chart of the day: AAUD JPY NBSP. A risk reduction into the end of last week came as equities sold sharply lower. This has weighed on Aussie yen, but is there an opportunity now to buy again? For now, this move looks just to be one of an unwind back towards a confluence of support. The breakout support of the old June, July, and August highs comes in between 76.76–76.85. There is the support of the rising 21-day moving average around 76.75 today, which has often been a good gauge for the near-term corrections during the market rally. There is also a 4-month uptrend currently 76.50. Near-term outlook has clearly been under pressure, but Friday's mild positive candle suggests an easing of corrective pressure and support starting to form again around 76.50–76.85. If this support continues to hold, then the bulls will look at this as an opportunity to buy once more. The hourly chart shows a band of support 76.30–76.70, and the bulls would not want to lose the key higher low support at 75.55 now. The recent high of 78.45 is the main resistance now before the key 2019 high of 80.70. Brent crude oil selling pressure is mounting by the session now. A decisive correction is gathering pace as Brent crude closed decisively clear below the $43.60–$43.90 support band on Friday. With the sharp deterioration in momentum indicators, RSI accelerating lower into the 30s, whilst MACD and stochastics also deteriorate quickly, this now suggests the market is on track to test $41.30. This is the first really important support of the recovery, being the floor throughout July. A breach of this support would turn a near-term unwind into more of a medium-term correction. Resistance is now forming where intraday rallies are sold into at lower levels. We now see a near-term ceiling forming where old support becomes new resistance between $43.60–$44.55. A close below $41.30 and the next key support is at $37. Dow Jones Industrial Average. The sharp correction of the U.S. tech sector has significantly rocked the confidence of Wall Street bulls. Volatility has spiked higher and a second session of selling pressure hit the Dow on Friday. Despite this though, the market closed well off session lows and some important technical support levels held firm. The confluence of the big medium-term support at 27,580 and the 5-month uptrend remains intact. Also, the market closed back above the 28,000 support. The market is shut for public holiday today, but for now the near-term pressure remains on. Response to these support levels will now be key, as for now, this move is just another near-term retracement within the medium to longer-term bull market. Breaching 27,580 would be a real blow to this now. Initial resistance is now 28,540, 28,735, which needs to be breached for the bulls to regain some lost confidence in the 29,200 high. For now, we remain buyers into weakness, but the outlook could quickly change. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.